We're back. Well, this is week 6 something. I don't know. But hey, you're watching Stocktwits Community Rip live every Wednesday at 2 p.m. You've got Ben Bags, Nick, JFDI, and Gautam Chipaiza. Hi, fellas.
Howdy.
What's going on?
Nick, I think the next time the intro music hits and we come in, like, I want to see you playing some air guitar or some real guitar, just like killing it for us one time.
Cool.
But we gotta jump into the market. Fed Fed Chair Powell just spoke, and the market's decided to take a classic dump because what's going to happen? Oh, these tariffs, drink. There's going to be some inflation with the tariffs. Nick,
Yes, sir.
what's your take on more tariffs and more inflation, if anything?
I don't have a take on it. It's not really.
I mean, we're down 3% right
I'm
now
taking
for the
things
day
from
on the
technical-
Qs.
Say that again.
Sorry, I didn't mean to interrupt. We're down 3% right now on the Qs.
Yeah, I mean, I'm taking more of the. I'm doing my best to take just the technical approach and not letting the rest of the stuff kind of get in my head. I mean, 2022 was a year that provided a lot of lessons for I think a lot of us, and price. I yesterday and the day before, I've been kind of mentioning that price was kind of trapped between the 10 and the 20 day, and both are declining. 50 days pointing down. I think we have the potential still right here to put in that higher low. Again, technically, and if we get that, the D point or like our ABCD leg up would push us through the 200 day, and would kind of confirm more of a V out. Whether or not we get that, I mean, we're still kind of in that range between like 520 and 550 on the SPY. I'm sorry, I was looking at the SPY, not the Qs.
I can pull up the SPY. There we go.
And we're in a range. The moving averages are controlling price, and so until you get a confirmation, you're going to be spinning your wheels unless you're day trading, intraday, short-term swings, or you're a bear and been playing this to the short side. Obviously, I wasn't. I was long into that kind of move into the 200 day, which obviously sucked. But I would significantly be shifting gears if we probably started to crawl below 510 on the SPY. I think everybody would be like, oh yeah, we're going to retest the lows. But if we take that 510 out, I don't think that we're going to be just retesting the lows. I think that we would take it out.
New lows.
We don't know necessarily how the market's going to respond once they do, or if they do start slashing rates. And I think that's kind of where we're going. So, yeah, I mean, it's a high volume pivots love to get tested. So, for instance, like that high volume low, that massive bar, I don't think any of us have ever seen a bar that big. Maybe we have. I guess I have to go back and look, but
this green one
high
here,
volume low. Yeah, it's a high volume bar, and we're still within. The reason that I'm optimistic is because so far we've been holding about the top third of that range of that candle. We didn't just kind of like roll over and collapse. Like that's kind of my last bit of optimism. If we end up rolling, like it's not gonna look pretty.
I read somewhere that's the 9th largest intraday move in the history of the market.
Oh wow, okay. I think that if you're,
but I believe the Qs was number 2.
Yeah, we're on SPY, but yeah, I think you're
Yeah.
right. GP, it was top 2 or 3 on the Qs, I think.
Okay. Yeah, like I said, we're at a place where like we very well could bounce. I'd love to see it.
Optimism is fading with you, though. It sounds.
No, I don't think so. I think it just is probably more frustration than anything. And I'm not even frustrated with like the market action. I'm probably more frustrated with some of my decision making. Like there should have been, when price dropped below that 200 day, there should have been no reason to have even runners on. Like for me personally, long-term investor, like I can't speak to, but when you can see that the 20 day is controlling price, dude, just go with it. That's your near term direction, your near term trend. So like for guys that are bears or were leaning to the short side for whatever reason, yeah, they should be ecstatic right now. I don't know if I would be pressing it right here. Like I don't know if I was short through the bear flag. I don't know if I would be pressing, but I'd probably be holding my short here. I can't honestly say if I would be pressing it here or through the lows. I think trading the short side is tough.
It's hard.
Yeah. Just, I mean, again, look at that bar. Let's just, I don't know how you would hold a short through something like that.
Well, the old axiom, right, is you don't short in the hole, right? And the problem is for short sellers is sometimes you don't know how deep you are in the hole yet, right? I mean, it was probably easier to pull a short somewhere up here as it was to down here, right? And I think that's part of the problem of being a short seller. GP, you need to bless us with some words of encouragement here, or are you a little more pessimistic now?
No, I'm not. I'm not pessimistic at all. I'm just tired of the. Not tired, but there's a lot of conversation that seems to be that everyone keeps getting each one of these moves right. Oh, it's going to reject the 20 day, so I'm going to get short. I'm going to get like perfect timing on everything because that stuff always frustrates me and annoys me. It's like does everyone just go to cash in their investment accounts? Do they never buy anything and hold it for more than the 20 day? Like, okay, for your trading account, different conversation, but investing accounts, it's different, right? So that always kind of annoys me. But from my perspective, we are still in the top half of last week's candle, right?
Yeah.
And maybe it breaks down, maybe it gets worse. We are in the top half of last week's candle. Today's volume is on nothing. And the amount of people talking about the short-term flow causing all this direction and stuff, and people knew, is loud. It is boisterous. It is something that is so prevalent right now on FinTwit. It is being posted everywhere, and at some point, probably soon, it's going to stop working. And so great, you got it right yesterday. You saw the flow. You fucking nailed it. Sorry, pardon the French, but we're still in a MACD cross that's on the bull side. We're barely flinching on that today, right? Down 3.5%, and we're barely budging there. It's still in the bull category. We're in the top half. Volume is slowing down. Volatility keeps trying, yet does not successfully get to where it needs to get to. There is a lot of back and forth and chop and stuff that's going on. Did some work around moving averages, and obviously everyone has heard about the death cross and how death crosses can be bad, and that is worse than a coin flip, by the way. Coin flips will actually net you better results. But the death cross, depending on how far from the moving averages on the weekly, is what seems to be important when I look back. If it's closer to the 50 week, when the death cross is happening, you're going to see further downside, and that's usually into the 200 week moving average. And if it's already closer to the 200 week, it tends to mark a bottom.
Okay, let me ask it a different way. Instead of being pessimistic, what can reinvigorate either one of you to see things moving in a better direction to the upside, as opposed to, at best, right? At best, this is chop. So what can reinvigorate you?
we take out that high from last week. I'm looking at that right now as my B point. So I don't think
Roughly
investors.
466 on the
Yeah,
Qs.
I don't think investors business daily considered that bar a follow through day. So I don't think they'll constitute a day 3 follow through day if I'm correct. I'm not 100%, but
And 549 on the SPY.
yeah, that's what I'm considering my B point. So I want to see that get taken out with some vengeance. It already. I'm trying to anticipate like patterns building out, right? Like if I see something starting to form, I'm looking to see if that pattern's going to is gonna build out. So it already looks like we're on a V out based on that day one rally attempt and then that massive igniting bar that could or could not constitute a follow through day. Because again, like as of right now, even today's action, we're looking like there's a potential to hold here. And if hypothetically we do take out that B point, that big bar high, that will definitely confirm the appearance of a V out of here. So
would you feel confident in waving the all clear flag at that point, Nick?
No. Hold on, let me. The SPY is starting
You
to
just feel better about it.
Price getting above the 200-day, consolidating, retesting the highs, or even like right about on SPY getting above 586, even 600. If when price does get back up towards highs, like let's just say we test like 600, 605 on the SPY, I don't think that we're going to necessarily bust that thing right off the bat. 1, 2, 3, 4. I think we see another pull in once highs get tested. And the reason I'm saying that is because if you look at like let's just say a chart of like the weekly, going back to what is that? August. August is where I would consider my 0.1. So now I'm looking for 5 waves in a base getting built before we're going to break higher. So over your tail up right there. Yeah. So if I just drew a line from there across and then a line at 600 across, it's like kind of like my range right there. So where your pointer is, that's like we're in 0.3 right now. We got to get up to highs, test that. That's 0.4. We pull back, put in a low somewhere, and that's our 5th wave before we ultimately resolve that range to the high. We ultimately resolve that range to the upside.
So something like that.
Yeah, totally.
Yeah.
I think the rallies, again, like from my point of view, as long as the rallies are tradable, that's kind of really all I care about, I think.
So roughly 10%, on the SPY and on the Qs to reach that daily 200. So still a bit to go, but not unreachable by any means. GP, one thing that, tech traders or tech investors, high growth investors like myself, will probably be a little squeamish about is usually tech and growth goes higher when chips are doing great. But we've had some bad news about Nvidia and the billions of dollars potentially lost due to this trade war that we're experiencing. And Nvidia is down 9% today. I saw you posted an AMD chart earlier. AMD is not quite as bad as Nvidia, but still in the semi sector, whether we look at the SMH or SOX, not looking great on many time frames. What's your take about how that could impact the rest of the Qs or growth?
So Nvidia finally said, "Hey, this isn't going to impact us in a meaningful way, right?" Um, and we are still sitting how many percent above last week's low?
Let me get back to the Nvidia chart, and I will tell you. We are currently 15-ish% above the low of last week.
Yeah, so we tagged this insane low in a really short amount of time in Nvidia, which everyone believes it's one of the strongest companies on the planet, next to Apple and Google and all the mega caps, right? Um, and that was on no news, just tariffs. And you finally got the news that tariffs are going to impact and people can quantify, right? And based on that, so far, right now, and that can all change in 30 minutes with a tweet or whatever you want to call it. But so far, right now, it's telling you that even with the quantifiable impact of a $5.5 billion charge this quarter, it doesn't warrant going all the way back to the lows. I would have expected to honestly, the way I was looking at it with that kind of news, that it would have gapped below that level, right? Today, I know that's a heavy percentage, but that's a pretty big impact because if I was a shareholder and I'd be like, oh crap, 5.5 billion is only the start, right? I want to liquidate out of everything. Um, what if another 10 billion comes next quarter and their revenue growth turns negative, right? Because of all these tariff stuff. So I wouldn't want to find out. So I'd be selling like crazy and I'd be out of this. And that's the way I think investors would also think. And so if they're not and they're not pushing it lower, like I said, it can happen tomorrow. This when volatility is in the 30s, a 10% range is like what our 0.5% ranges used to be. So calling a 10% move down is not some genius thought process by anyone in the markets. It's just it's normal in a volatility range. Things go up and down 10 to 15% day over day, week over week, whatever. But that's the one kind of bright spot for Nvidia. I talked about this in November. I wanted the retest of the deep seek news from August, the undercut, and we got the undercut. The buyers showed up. Now the buyers have to push up and through. And we know bottoming is not a day, it is a process, right? The only part that really frustrated me is why is AMD selling off more than Nvidia? But that's AMD's price action for you for the better part of the last decade. Um, that's how it goes. Uh, yeah,
Well, I
I
mean, it's
don't think
similar to
I
why
don't.
is Target weaker than Walmart, right? Like, I mean, there's best of breed, and I don't think anybody's going to argue that AMD's a better company or better stock than Nvidia.
Yeah, but they didn't even take the impact of the charge, and they're down the same percentage in Nvidia, which is
Sure.
ridiculous, right? So maybe they're more worried about what the impact of the charge is for AMD's growth prospects. I have no clue. Um, but I think so far we're still in the upper part of last week's range in the stocks as well.
Yes. Still, I mean,
And what
it's
I what I
basically the
told my
same.
what I told my crew is expect a tight inside week. It's not tight, but I was expecting an inside week, right? In the markets in general. Uh, and why is that? Not because the price action doesn't dictate it, but OPEX is notoriously sticky and stubborn, right? And there's a lot of people positioned in many different ways. So I was expecting a nothing burger of a week, and we kind of had that until today. But yeah, I don't see. I see the concern for sure. I'm not discounting any of that stuff, um, but the news seems to have less impact.
Nick, how are you looking at it?
Um, Nvidia and the SMH. I mean, God, the weekly chart. I don't know. Like I just anytime a measured move on a pattern like tells me it's gonna like get absolutely crushed, it never really ends up playing out that way, or at least just in my experience. And like if you look at like the SMA or Let's see, that's Mitchell. The range is from, let's just say 200 to 260. The measured move would be down to 140. Actually, that's not too bad. Nvidia was the one that kind of looked like the measured move was back near 20, and I'm like, I don't think Nvidia is going down to 20.
Well, there was some put buyers today, right, GP?
Dude, like that's the stuff that I was talking about, right? And everyone's talking about it, which is the
65,
35.
right? 65 is
Yeah,
what the put
65
buyers
puts for
were.
next week. We're just gonna have the third or fourth biggest company in the markets collapse by what an additional 35%, 40% into
That
next week.
from today, that would be from the start of the week, that would be a 42% drawdown in a week.
I could.
Yeah. And
I'm
so let
not
me just
saying
go buy some puts because it's gonna work because that's how this works, right? And it has worked that way, so I'm not arguing it, right? Buy puts, get paid. Unless you woke up on Monday, because if you bought puts or if you bought calls, you got destroyed because they crushed the VIX.
Nick, do you think that 65 on Nvidia is a likely thing? Do you think that's just somebody who decided to throw away a bunch of money? Like, what? Why would somebody do that? You said your measured move would be down in the 30s.
On Nvidia or SMA, or Nvidia would be
Nvidia,
down to. Well, actually, hold on. No, it would be right, basically down to 50. But with that 4-year trading at at 55 right now, I could see Nvidia bottoming out somewhere between 60 and 75. I don't think I would be hard pressed to think that it goes any lower than that. I think time is something to consider here because we just I'm not intelligent enough to determine how long this dick swinging contest is going to go on between Trump and China. So I think that was probably what most were thinking, probably well before I really gave a shit about it. Which, good for them, totally.
So do you just avoid semis in general? Like it doesn't sound like any of us are.
Maybe Nvidia could go range bound for the next 10 years, 5 years here, and it could just fluctuate between 60 and 100, 60 and 140, while the rest of the names start to pick up steam. Like, it would definitely make room for AMD, TSM, all the other ones out there. I don't know. I saw someone talking about SMCI recently. Is SMCI the only semiconductor that is entirely in the based entirely in the United States? Did I read that right?
It's a fraud.
Oh, okay. Sure.
It's entirely a fraud, and if you are, maybe SMCI works, but if you are in the chip space, stick to the leaders is all I would say.
Yeah.
Look at GFS. GFS is entirely in the United States as well, and it can't find the bottom.
Intel.
Then what I saw was definitely not accurate.
Anyway, there's too many looming stuff in SMCI that's not like if you're doing a trade, fine. I'm not talking about a trade, but as a long-term hold, it's not where I would want to put my money because I don't trust it. And if you trust it and you have, intimate conversations with C-level suite and you know exactly where it's going, good for you. But I go based on what I can see, and I don't have that. But can you go back for 1 second? Take a look at the Nvidia weekly candle from March 23rd, 2020, and the follow through on the week after.
March 23rd, 2020. That should be right there.
The
Oh,
COVID
I nailed it. I nailed it.
The COVID lows, right?
There you go.
Yeah.
Right.
That's the thing, GP, though. Like, that's why you never know when that type of candle is going to show up.
So, but that was the infinity candle, right? That was the Fed saying infinite money grinder, bank, whatever you want. And even after that, look at the candle that followed through. It tried to break out higher. It turned into an inverted hammer. You can argue that that's the end of in that moment, there were lots of people saying, nope, this is done. This is done. This is not going to go anymore. And you have something similar. You have the Trump factor, of course, and things can get worse. But I can tell you, in the first week of April of 2020, if you were around in the markets of COVID, no one thought COVID was going away in a couple of weeks, right? We were already 3 to 4 weeks into a lockdown at that point. New Jersey locked down in March 14th, right? And so what I will say is that no one saw COVID coming to an end, didn't think money printing would work or whatever it was, and then we had a historic move, right? And so I'm not saying that's the same scenario here, but narratives unfold in these situations quite often than not. And even the traders that I respect and that I look up to and mentor are concerned about what the tariffs will do. So, and I can tell you most of them weren't telling you that the bottom was in 2020 either, right? Because that's not what they do. They assess based on price that comes in, not where it's going to be going. So I'm not saying that the tariff thing can't continue. It looks like it's going to continue forever, but things change. So just keep an open mind.
Yeah, totally. You just never know, and so you might as well always be about as prepared as you can possibly be.
Well, I think that segues nicely into one of the topics that we wanted to get to today. It was just your risk management, right? I mean, some folks are long Nvidia from the single digits, right? It's split a few times, so there could easily be people. I think that price back in 2020, right, was, that's $5. There's a lot of people that bought this in Nvidia or bought this. So if you're not in the single digits, you're in the teens, right? And now the price is up to $100. How do you manage the risk on that position, right? Because obviously it has grown exponentially. What type of time frames are you looking at or thinking of? And Nick, your favorite conversation is, how do you separate self from the trade?
Yeah, I mean, those that have their identity wrapped up in their account value, in their last trade, in their daily P&L, in whatever it may be, it's a recipe for like just getting swung all over the place. So what was it? Sorry, I kind of lost my train of thought there. What was your?
No, I mean, when we can use Nvidia or we can use any position, just how you manage your risk management, right?
Well,
What time frames are you looking at if you bought Nvidia in, let's just say, the teens or low 20s, and how do you separate yourself from that trade to be able to know what to do at the right time?
I've never struggled with setting my stops. I've never struggled with taking losses. I have always struggled with like boom and busts. So like round tripping. And the only way that I have been able to curb that is to lean into trail stops. And so I take into consideration both a range, like if price is starting to put in a range, as well as like the moving averages. So just your typical moving average, whether it's the 10, the 20, are probably your two more important in the near term, and then your 50 and your 200. That being said, if you have a stop like set underneath a range, that doesn't necessarily mean and price takes out below that range. You don't need to wait for the 200-day to get tested to say like, all right, I'm out. I can always buy it back. But yeah, trail stops have been the only way that I have been able to curb myself on trend.
Do you think that's ego, Nick? Do you think that's just ego, that you're so proud of the position that you bought it in an ideal spot and it's profited so much that by selling it at any time, like you're, I don't know, it seems like a bit of a hypocrisy, right? Like, why
Yeah,
would I sell this? It's grown at X amount. Why would I sell this now?
I think it's that. It's totally ego, absolutely. Because if you're sitting there on social media and you're comparing yourself to this investor, that trader, and this guy's talking shit about you, about people selling or people being bearish or this or that, like, yeah, there's a part of you that's like, well, like shit, I need to, I gotta hold this thing. I gotta hold this thing longer. I gotta hold this thing longer than that guy. I
I'm
was
never
like,
letting this thing go.
yeah, that's foolish. I'm here to make money, not to like. I'm talking to myself here largely. Like, everyone has their own little thumb screws that they're dealing with. The market's going to expose every one of them if you've been sitting in the market long enough or been in the market long enough. So, I personally, I kind of like the problem that I have or have had because I think the disobeying stops and not taking a loss is a much harder problem to overcome than round tripping trades. Like that's, I don't, yeah. So it sucks and has sucked, but
This market, first of all, apologies to the investors of the last 8 to 9 years. This market has round tripped you at least a dozen times. Um, it is not a fun market to be in unless you've chosen rightly. There are so many names that have underperformed decade.
yeah,
One of the largest, to say it, Disney, right? Like you can be, I'm not talking about a high growth, Disney's whatever, 10 years of nothing. Um, and okay, they have a dividend or whatever, but you don't buy stocks like Disney or whatever just for the dividend. You're looking for incremental growth over time. In 10 years, you've sat and taken face constantly. And I can list off probably 100 stocks that look like this for every one that looks like Nvidia, right? So first choosing, especially in the 8 to 9 years, you probably would have been better off choosing the Qs or the SPY. That's my personal opinion. If you didn't choose one of the FANG names or whatever it is, it's been round trip central, and it is soul destroying for a lot of people. The way I handled Tesla, right? I always thought it was going to be a long-term hold, but when it got euphoric in 2020, 2021, I'm up 2,400% on a investment. I'm going to sit there and I'm going to trim 20%, 30% off the top, right? That's me. That's how I handle it. But what happens in those situations consistently, and it happened to me then, and so I hate it, and so I'm gonna look at this at a different story, which is the mistake I made back then, which was I sold 20, 30%, and then I invested it in something that I thought was gonna be good, and that took the biggest dump ever, and now I'm in this mental battle of crap, this is a bad idea, right? So the thought process that has evolved over that time is if you believe in a position like Nvidia or Tesla or Microsoft or whatever these names are that have proven themselves over multiple decades, take that cash, sell it, and then hold it, right? Don't go invest it because your idea from the beginning was right. You just want to pull back to get back in, right? And so, Nvidia, for example, forget Tesla because that thing goes up 50 and 60% every 3 months. Nvidia has been, for the most part, the leader in every growth cycle in the last 8 to 9 years, right? So they were in crypto, they were in AI, they were in blockchain and everything from the beginning. They lead. So when you have these euphoric moments, why was Nvidia euphoric? Because everyone's talking about how cheap it is, but at the same time it was eclipsing Apple's market cap, and you're like, nope, 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 got to grow into that valuation. They are the law of large numbers. When you got to a 3.6 trillion, if you weren't trimming down positions and you're just going to hold for the ride, good luck to you. I hope it works. But in the conversations of market caps, it was the largest market cap company in the world at one point, maybe a day or two,
Yep.
and it made a third of the revenue that Apple does, half the revenue that Google does, half the revenue that Microsoft does. I get it. It's cheap. It's 17 PE, whatever. I don't care about that. That's what I call a value trap, and you should have been trimming into that. So when you get these pullbacks, you can add back and you build over time. But if you're just one cash lot and you keep holding it, you have to hit home run after home run over decades in names, and that's hard to find in general. So that's the way I kind of handle it. I goofed it by investing in stuff during the 2021 hype craze, and I made the mistake of giving back a lot of Tesla profits, right? So that's the way I'll be handling it moving forward is when it gets to that euphoric moment, either you can do it multiple ways. If you don't want to sell the stock, sell calls against your stock. If you get called away, great. If not, like, so the way we handled Tesla for my dad, because he didn't want to sell his shares, I just sold 30-40% out of the money calls a year and a half out for him when it tagged, I think, 350, and then it went to 414. So don't get me wrong, he was red for a little while, but they all expired worthless, right? And so, and the IV was so juiced at that time because it had a 20-something% move. We got over 10 grand a contract, right? It was nuts. And it was, so there's multiple ways you can handle hedging your positions. Just, that's my 2 cents, sorry.
That's particularly my favorite way.
10-minute 2 cents, but 2 cents.
I know Nick talks a lot about trail stops, but that's kind of the way I use when I sell calls against my position, right? Because I'm getting paid if I get called away, I'm still getting paid for that getting hit, right? But I'm also collecting the premium. So I really like to do that. I've been doing that in Cloudflare and Marvell for years now, and these positions just pay for themselves over time, and I still have them, right? I haven't got called away yet, knock on wood. So that's the way I like to do it. And for me to remove myself, we all have ego. We all are proud of ourselves when we hit that home run or when we make the right call. But at the same time, you can't just rest on those laurels, right? You got to get back on that bike. And Nick, I love the way you put it a couple of weeks ago. The work is never done, right? Even though I'm sitting on cash, like where am I eventually going to deploy the cash? So, right, I bought some Broadcom. Broadcom's a name that I wanted to be in for a long time, and I felt that it was oversold. So let's grab a piece of Broadcom now, something that I didn't have an opportunity to do previously. So I think you got to keep studying and keep doing the work. And if you do the work, right? If you do the studying, then it removes you from that, and you're not working off of emotion and just trying to make a trade for the sake of making a trade. I really find that selling is the hardest thing to do. It's easy to buy, it's easy to throw money at stuff, but it's hard to say, okay, I'm getting a little greedy here. I'm being a pig, right? I'm up whatever percentage you want to throw a number at. That's what I'm up. Well, how do you use that? Because until you actually sell it, it's just value. It's not real in any tangible sense other than, hey, look at this on paper. So I think that's, for me, the way I kind of look at it is you can't look at your last trade as your best trade or your only trade. You got to plan a little bit further out than just the here and now. And it's different for everybody. But if you do the work, you come at it from a little less. You can either reinforce your bias, right, because that's how you're drawing your chart, or it might invigorate something in your mind to be like, hey, maybe I'm wrong on this, right? And I think either one of those can be beneficial to you. If the stock keeps going down and you're like, why is this going down? But your chart's busted. You probably need to look at it a different way, right?
Yeah. The
Nick,
work is never done. I mean, that on that like on that subject, I mean, you're not special. Like, none of us are special. If I'm feeling something, I'm feeling all like anxious or whatnot, there's a good chance that you all are too. Like, whether or not you're aware of it, you may not necessarily be aware of it. And how you respond, how you react, how you behave based on that feeling is going to be unique to each one of us individuals. The more you do the work and the more you become in tune with like what it is that you're feeling and why you're feeling it, the more you can look at these charts and these patterns and say, well, holy shit, that's why the bottom got put in there. That's why the range is here. It's not going to be foolproof, but it's going to give you, it gives you a lot of insight into, I mean, again, like, yeah, right now, I guarantee you there's a lot of people right now feeling like fuck, this thing's going to go test the lows. We're going to test the lows now.
I'm pretty sure most people think we're going to enter a 2008 type market. So,
2008?
Yeah, dude, like that's literally, first of all, they've been calling for it on every crash since 2011, by the way.
I know.
So maybe they're right this time because Trump's inflicting it and he doesn't seem to care too much. But we're at the gap down from last Friday on the Qs. There's not a lot of volume selling, but like we've been in negative gamma, man. It's been hard to get out of that, and it just creates this pressure because there's no panic, right?
GP, explain the negative gamma. I don't think enough people know about what that means.
Yeah, I think you go read it on Google and figure it out. Basically, it's a lot more complicated. I mean, read about it, right? But basically, the puts are applying pressure to the downside, right?
Yes.
And so it's like the self-fulfilling prophecy that is used to hedge. And we're in that situation, and we continue to be in that situation. There's not a ton of volume, so I don't really believe it. But we've talked about this before. Sometimes no one believes, and then it breaks levels, and the volume comes in. So I'm not going to put too much emphasis on that in this conversation. But yeah, there's a lot of stuff that looks broken, right? And if you're currently in the markets and you're trying to figure out where to allocate some cash, let's say you have 50% cash and you want to put 20% into work and you'll assess it later on. Can I suggest that you don't do it in PayPal? That's all I say, right? Like, and why I say that is look for charts that are in defined uptrends on longer time frames. And so that's the work that has to happen. For me, that's the work that happens, right? Like, and so one of the first things I did last week is figure out where I would, if the markets collapse, where do I want to be long the Qs? Where do I want to be long the Qs? 344, somewhere around there. So I was looking at puts that were coming into this week. Those puts last Monday were nearly $3 a piece, right? And they're going to expire worthless, but that would have been a great way to play the markets as well. Let's say you want to put that 20% cash to work. Let me sell some puts. If the markets get there, I'm long in a comfortable zone of the Qs. If not, I get to collect that cash and reassess once we stabilize, right?
Hey, Nick, one name that I put up here for years, we talked about gold and breaking the all-time highs, and it's gone to new all-time highs, right? This is a chart that is seemingly starting to defy gravity.
Yeah. And we talked about this, Nick, right? Like, until it breaks all-time highs, do not get long. But once you do, just hold it for the ride because it was going to be sick. but it's getting long into the tooth, and that long in the tooth can continue all the way to 4,000. So don't don't sit here and just think about the size of the base in gold and the measured move of this. You can try at some points to get short, do small positions, don't risk a lot, and try to capture those moments. But it's in a ride right now,
This is
and
the monthly chart that's on the screen, and that's 150 months before it broke out from prior highs.
yep. And all I will say is when it does break, I would suggest selling some because gold will then be again in a really long basing pattern.
Yeah, dead money.
Nick, where
Yeah.
you at with gold? I know you were a champion for gold for a minute for us.
Yeah, it's right now I own the GLD and FNV. I stupidly sold my JNUG and my Nugget.
The miners.
Yeah, I opted to play those versus like I mean like I said I have FNV, but yeah,
I mean, the miners still are in a downtrend forever. But they just took the weekly 200. They have all the moving averages under it. Would you take a shot at JNUG here, or would you let it?
uh,
Would you just let that go?
yeah, I'm gonna let it go. I need the moving averages to catch up to price. It's too far extended on the daily for me to get back in. I sold the last of my what was it Nugget I think yesterday. No, that wasn't Nugget.
We're well over 100% extended from the 200 month moving average in gold. The 200 month moving average is 1532, and we are sitting at 3300. Not saying that
That's
we can't
insane.
go high. Yeah,
Yeah.
but if you look at the last time we were this extended, it was around 2010, 2011, and the monthly moving average, the 200 month, was around 500, and we hit 1800. So I'm
Just look at
not
all the
saying,
time frames, right? Like it's extended on every one of them. But yeah, from the monthly, that is 111% is wild.
yeah. And if you do the GC futures, you get a lot more history. That's what I'm looking at. But yeah, it's extended, but this is a freight train. Don't get in front of it, right? If you
No.
want, buy $100 worth of puts and call it a day, but don't go nuts here, right? Like when it breaks, it will give you a long-term short, and you don't have to worry about it too much, right? But right now, it's in a trend.
Overbought can stay overbought just like oversold can stay oversold, right?
Yeah.
Gold.
We got about 10 minutes left. Chat. Does anybody want to look at anything? Meta is a name that I see in the chat.
Meta.
Anything you like about this here, gentlemen?
Not at the moment.
No.
It doesn't look as good as some of those other tech names that we went over earlier.
Yeah.
In
Remember
my
when
opinion.
Meta was holding the 200 day? As relative strength, it is now becoming the relative weakness one. So, but that's literally perfect. Look at that. Broke the 200, held the 200 day, broke it, came back to test it, and is getting slammed.
Well, this is one like I mentioned on Nvidia, right? People could be long anywhere in here in the 100s on this name.
Mm-hmm.
How do you manage that position if you bought somewhere through here? Let's just say anything below 200. I mean, this is not financial advice, but
So I probably do nothing if it's gotta start where I think it was going when I first bought it, right? In terms of size and velocity and measured moves and all that other stuff. So if it's still within that range, I'm not too worried. Right? Would have been great to sell it at 700 and something, absolutely.
But then you're playing the time, not the time in the market conversation, but trading the market. And as investments, I don't necessarily want to be trading. I want to be in stuff that I want to be in long terms. I don't. A lot of people are like, well, why didn't you sell Tesla at 488? Because I was like, my conversation is it goes. I think it's going higher. It's like, well,
Yeah.
you just gave back 50%. I'm like, what do you always trade in and out of your investments? That's not how I do things. I'm happy that you do it that way and you can manage it, but that's not how I do things, right? Like almost every position I have in Tesla is green, whether it's 5% now and 100% before. But anyway, same thing with Meta, right? Like, so it really depends on what the conversation you had with yourself when you first bought, and does that thesis still hold? And the one thing you have to keep in mind, if the market's selling, nothing is safe.
Yeah.
Not a single thing, right? Like
There are no
if this
supports. Right.
if this market breaks down again and you get your 2008 type move, even gold gets smoked.
Yep.
Even gold gets smoked. So maybe that's where we're going. That's why gold is pumping right now, because it's waiting for the rest of the markets to break and then it can break down with it. I don't know. Yeah, it really depends on what your thesis is, where your bias is. There's so many, Ben, it's hard to answer that question with any kind of, it really depends. That's all I
Yeah,
can.
what your time frame is, right? I mean,
Yeah.
I sold some Tesla during the winter, right? So that was a trading position, not an investment position. So my time frame was within 1 to 2 years, basically. It was when I was trading that position. So that was easy for me to let go. It's not something that I wanted to hold on to forever and ever. Amen.
So just, yeah, absolutely. One thing, there is a 4:30 p.m. call scheduled. So news just flew by with a special guest. Um, the one thing I wish, what I always ignore is news, and I found myself paying attention more. I wish these guys would shut the front door um, on the amount of times they speak. This is worse than Kramer now.
So I'm sorry. Who's the special? What's the special announcement? Who's this coming from?
It's literally in quotation marks. It's a special guest.
Who though? Is this a White House thing? Is this a Tesla
White
thing?
House press briefing.
Got it. Got it.
Isn't Japan in the hood right now?
It's going to be the Easter Bunny.
Probably.
That's who's coming up. Hey, guys, we got like 2 minutes.
I mean, hey, they say follow the white rabbit.
We got like 2 minutes. Any trades, any setups that you're looking at, thinking about getting into? Nick, I'll shoot at you first.
If you're an active trader, the trend is down. So trade with the momentum at your back. If you're a longer term investor, longer term trader, even, I'd say just be patient and have your continually curate your relative strength list. And I just want to preface that by saying whenever I mention relative strength or RS, I'm talking about Market Smith's RS ranking system, not like the relative strength oscillator indicator you can put at the bottom of a chart. I kind of felt this way, like back in, when we were kind of battling out 2022, when we start to see these really nasty ones, like I can't help but think that when the dust settles, like the opportunities are going to be out of this world. So the more patient that you can be, the longer you can sit on your hands and preserve both your mental and actual capital, like the better. So I don't have any specific trades.
Just be patient. Just be patient.
Be patient, yeah.
That's great advice. GP, anything?
People
My
don't wanna
gold
do
calls.
Gold calls from GP.
That's sarcasm, by the way. It is also not financial advice. Not much to do here. Personally, it's Nick's bang on with just be patient. It's OPEX week. I think you'll see the real move next week into May and stuff like that. Yeah, just be patient. Ignore the flow conversations. It's getting long in the tooth. Find stuff that you want to be long term. Sell puts if that works for you. If you have the cash and you want to be long stuff, but you don't want to risk it. At this point, things need to calm down. The rhetoric needs to end, and that just requires some patience.
Collect premium, don't sell premium. That'll be my 2 cents. I'm also looking at rare earths. I've talked about MP in the past, the old Molly Corp. I expect some volatility there, knowing that China has said they're stopping any rare earth imports to us. So
Did you see those two
I think we can
tickers?
play the yo-yo on that.
Did you see those 2 tickers I mentioned earlier? Hold on one second. I'm trying to pull up my Twitter quick.
Maybe we can talk about it on the chat. I think we have a bit of a hard stop today, Nick.
Oh, sure.
Yeah.
All right, guys. Thanks for tuning in. GP, Nick, thanks for always being here. Love you guys. Appreciate your time. We'll see you next Wednesday, 2 p.m. on Stocktwits Community Rip Live.